In this episode of The Bear Roars, Stan sits down with Katie Jacobs Stanton, founder of Moxxie Ventures and former executive at Yahoo, Google, and Twitter, for a candid and wide-ranging conversation about leadership, innovation, and what it takes to back the builders of tomorrow. Katie reflects on her journey from the front lines of Silicon Valley's most transformative companies, her time serving in the Obama administration, and the decision to strike out on her own with Moxxie Ventures. Along the way, she unpacks what she looks for in early-stage founders, how she spots conviction before credentials, and why pattern recognition matters more than pedigree. Dan and Katie also dive into the massive shifts underway in tech and venture, from the rise of AI in healthcare and climate, to the push for more inclusive cap tables, to Boulder's growing role as a launchpad for mission-driven innovation. Let's poke the bear to kick off the conversation.
Well, Katie, this is going to be a lot of fun. Thank you for doing this.
I'm so honored. Thank you so much.
For certain. So let's start out with a topic of the day here in Boulder and in Colorado, the Sundance Film Festival. So we just were awarded to be the new home of the Sundance Film Festival for the next number of years. I think it might even be a 10-year minimum relationship. What does that mean to you? How excited are you about Sundance?
I am so excited. And honestly, thank you so much because you are one of the leaders that I think helped make sure that this happened for Boulder. And
we played a meaningful role, but I don't want to overstate it. A small role, but small but meaningful. I'll put it that way.
But it was something.
Yes,
and I do think it's really important. It's actually, I think there's many, many lessons here, but the importance of the business community, the public service community, the arts communities, and all these communities working together because they reflect the amazing fabric of Boulder, right? And bringing the arts, bringing more technology, bringing more innovation here is really exciting. There's so many people that I think are going to benefit. It's going to be awesome for people here to, welcome the artists and the producers and the directors and the writers and all these communities to come here and celebrate all these great films.
Yeah, absolutely. And we'll get into this a lot. You've come here from Boulder, from Silicon Valley. So using kind of the Silicon Valley lens, what do you think something like Sundance means for the venture community, the entrepreneurial community of an area like Boulder?
One of the things that drew me to Boulder personally was that, I love the mountains. I love the community. I love the freshness. I love the idea of, just being outside and seeing all this natural beauty. But there's something about the people here that are very welcoming. And one of my first conversations with someone when I moved here, they asked me what I did. And I said, oh, well, I'm a early stage investor. And then they looked at me puzzled and they were like, no, like, what do you do? Like, do you ride bicycles? Do you ski? Do you do yoga? Like, what do you do? And it really made me pause because there's something about Boulder and Colorado in generally that makes you a lot more multifaceted. Yeah. And you have hobbies and it's what you do professionally and personally. And I think that ethos and that spirit is going to reflect really well for the Sundance community and for people who come here and really celebrate and walk around and learn and build something really beautiful together.
Yeah, because the connection with the outdoor community is important at Sundance. Park City right there and the ski resort. People would ski while they went to Sundance. We don't quite have the ski resorts right in town per se, but they're really close by. But the connection to the mountains, the connection to the outdoors, and the creativity that is aligned with that was a big deal for Sundance board when they selected Boulder as their new home. So what do you do?
Oh, it's a great question.
In the context of a Boulderite asking the question, not a Silicon Valley person asking the question.
Now I have better answers because when people started asking me what I did, I realized I really did not have enough good, healthy hobbies. So I go to Yoga Pod almost every day. So I have all these other hobbies now.
You go to Yoga Pod?
Yeah.
I go to Yoga Pod. I've never seen you at Yoga Pod, but...
Well, thank God, because I don't want to see anybody I know when I'm there because it's like 105 degrees.
Yeah.
But
and sometimes they're very crowded. Sometimes you're like a sardine in that 105 degree room.
Kind of disgusting, but it is great. There's so many great things to do to feel good about yourself. But what I get paid for, at least right now, is I'm an early stage investor.
We'll get to that later.
Okay, we're skipping. Okay.
I want to know what you do.
Oh, what do I? Oh, you really do? Okay, great.
I really do want to know what you do.
I messed up. So what do I do? Well, I'm a mother. I have 3 children and 3 bonus children. So we joke we have 6 kids under management. So
is that what I got to be calling my stepchildren? Bonus children?
I like bonus better than step. Don't you think? Like bonus just sounds like, I don't know. It sounds a little bit more like exciting and positive, and they're a bonus in your lives.
That is true, because when you describe them, I don't like to use the word stepchildren. So I usually start with, we have five kids, we have 5 children, but then you like put a qualifier on there at some point in the conversation that differentiates between, 2 from, my earlier marriage. She's got 3 from hers, but it would be a better way of saying it to just describe them as bonus children.
I agree. It needs a whole rebrand, right? Because like stepmother always has like a bad vibe. You think of Cinderella and like all these like terrible people. Yeah. But like bonus feels very positive and very special.
So I'm a bonus father?
You're a bonus dad.
Okay, there you go.
Not to everyone, you're a bonus dad. But so with 6 kids, there is a lot of activity going on. But in addition to that, I mean, I love the outdoors. We go hiking almost every day. We live at the base of the Rockies. Yeah. I think once we had our house, and we live in Chautauqua, and we bought the house because we thought it could accommodate all these children, a fine location, all these things. But we didn't really understand the value of the proximity of being next to the mountains. So there's no excuse. So we try to go for a hike every day with our dogs, and that's been really fun. And all these other activities that we do. And I love to travel. I travel a lot.
Mm-hmm. So you are my first guest on the podcast that previously had their partner be a guest as well. So Greg was a prior guest in it. I do have one that we recorded quite some time ago, but we have not yet released it for reasons that have to do with the situation with the 2 guests. We do have one coming up where it's a husband and wife as the guests because they did a business together. But let's talk a little bit about what brought you to Boulder and a little bit about Greg in the context of your guys' partnership.
Well, I have some breaking news for you.
What?
We're engaged.
Hey, congratulations. When you first said that, I'm like, we're going to have to cut out this part. Well, congratulations. That is fantastic news. Yeah. Well, you guys are such a great couple, and we haven't known you for very long, but we've, feel like we've built a really good early relationship with the both of you. So congratulations.
Yeah,
wow.
Thank you so much. Yeah, he surprised me. We've been together for 9 years. And our first date was a blind date. His first person I dated in a very long time. And this blind date was set up by our friend Chris Saka. Yes. And we were in San Francisco. And I have no explanation for this, but at the time I thought this was a good idea, that because it was a blind date and I was very nervous, I should absolutely bring 2 rainbow wigs in case we needed to liven things up somehow. And so I had these 2 rainbow wigs in my purse, and we have this great first date, and the rest was basically history. So we stayed together those, the past 9 years.
And what is a rainbow wig?
Literally a rainbow wig, a wig that looks like a rainbow
really?
on our heads. And so...
and that didn't scare him away?
No.
Wow.
I mean, he writes cartoons. So
yes.
I like color. You can't tell right now, but I always wear a lot of color. And, he's been in the cartoon and the animation business as well. So fast forward to a few weeks ago, I was on a business trip in San Francisco, and one of my investors had asked me to do this dinner with a couple of other people and on a Friday night, which I thought was a little weird, like on a Friday night, but that's okay. It's part of the business. And so I'm walking around, did all my founder meetings, and 10 minutes before the what I thought was our LP dinner, they asked me to switch to this restaurant called Water Bar, and that's where Greg and I had our first date. And so I walk over and I think, oh, well, that's so nice. And I take this selfie out front. I'm like, oh, Greg, look where I am. Ha ha. And I walk in and I ask for the table. And as I went into the restaurant, the entire restaurant is wearing a rainbow wig.
Oh, geez.
And I thought, that's weird. I mean, it is San Francisco, so anything goes. But that's a little strange for San Francisco. It's a Pride Week. What's going on? And then I see Greg come out of nowhere with a rainbow wig on, and he gets down on his knee and he proposes. And that was that. So
wow.
so that was.
And the people in the restaurant were just random people that he gave wigs
Random
to?
people. He gave everyone a note and explained what he was going to do. The dishwasher was wearing a rainbow wig. Everyone was in on it. And I was literally stunned for about 10 minutes. Just my jaw dropped. I was like, what is happening? I was like, where are my LPs? Are they here? This is going to be such a weird dinner.
Yeah. Wow.
But
that's
anyway,
fantastic.
So I wanted to tell you in person.
Wow. That's fantastic. In person.
Yeah.
And share
Live
with
on the
many others
podcast.
too.
So breaking news.
So you mentioned the person who set you up, Chris Sacca. So tell us a little bit about Chris Sacca. I know Chris Sacca just a little bit, but I was an investor in his early fund.
Congratulations.
Which is kind of a historic fund. It wasn't a big investment. It was through kind of a wealth manager. So I know about Chris through that. And then I got to know Chris a bit through us both having homes in the same development in Cabo. But your background with Chris goes back a long ways. So,
yeah.
And that will help introduce kind of you as a pre-venture capitalist and what you were doing, which is a hugely exciting part of your story.
Yeah, Chris is an icon. He is a legend. So Chris and I worked together, I don't want to do the math, but like 25 years ago at Google. And we were both, relatively early in the first, less than 1,000, maybe 500 to 1,000 employees. And at that point in Google's history, you kind of knew everybody. It was a very exciting time. And we both worked on, we had a variety of different roles. I worked in product for a while and then in what we called new business development. All these new ideas that Google might have, like balloons with satellites, with new partnerships with the mobile carriers, all these different things. And so we got to know each other there. And there was something about Chris. He has hustle, he has grit, he has courage, and he's just very, very smart. And so we became good friends there. And around 2008, I got this opportunity to go work in the White House. And I was like, I have to do that. That sounds so interesting, this front row seat to history. So I left Google, had to sell all my shares and worked for the US government for about $82,000 a year.
So it cost you a little bit of money.
Maybe not the best economic decision of my lifetime, but at the time, and I'm very glad I did it, but at the time I was really excited.
Wait, that didn't sound like a lot of conviction in your voice when you said you're really glad you did it.
I'm glad. Yeah, net, it all worked out. But Chris, he left Google a little bit afterwards to become a venture capitalist. And I had no idea what a VC was. And he started, as you know, as you benefited from as well, from lowercase capital. And he asked me if I wanted to be an investor. And I was like, well, I don't understand what you're doing. And he said, well, I'm basically raising all this capital. I'm going to invest in a bunch of companies. And maybe in 10 years, there will be some money to pay back. Maybe there won't. It's like, this sounds like a total Ponzi scheme. But Chris, you're one of the smartest persons I know. I believe in you. And I wrote him a small check, which I wish had been a lot bigger, but I didn't know it was the first venture investment I had ever made. Yep. And it was one of the big lessons that so much of it is investing in people, right? And so I made this investment in Chris in lowercase capital. And
did they invest in any interesting companies?
A couple you may have heard of, like I think Uber and Twitter and Instagram and Stripe. I mean, his hit rate was just extraordinary. And we stayed friends all those times. So like, wow, talk about a fork in the road. We were, working together at Google. I chose this one path. He chose this other path, very different, learning different things. But he was someone that I always admired and always liked. And he married, and even as great as Chris is, he married up with Crystal Sacca, who who's just another extraordinary person who really also helped build lowercase capital as well. So
I didn't know that she had a role in it.
Totally. Like she had picked, they're also investors in Blue Bottle Coffee, and that was total Crystal's vibe. She did all the marketing, all the branding for this. And so the two are just...
You said Crystal's 5? Is that...
Sorry?
You said Crystal's...
Oh, what did I say?
Oh, I thought you said Crystal's 5, like she had 5.
Oh, no. I don't know all the ones that she picked, but she was definitely in the beginning and picking a lot of these companies and part of the team. So
and it was the fund. His first fund was one of the most historic returns.
Like 100x.
100x.
Yeah. I mean, they're very good at what they do. And they haven't let it go to their head. They still work so hard. They have hired great people. They have built and they have scaled, and then they took a breather. So, as he said, I think he said, we're hanging up our spurs. We're going to, do different things right now. They've been very philanthropic. But then, a few years ago, they were like, they could see all the challenges going on in the climate, and just trying to figure out what is a better way that we can put our resources to work. So then they started lower carbon capital, investing in a lot of climate forward companies. I became another investor. Like, the one thing I've learned is always bet on Chris and Crystal. So they are back in the ring, back in the arena right now, doing a lot of great investment work.
Great. So let's go back to the Google time and what you were doing there. You started to talk a little bit about the environment there. Everyone knew each other. It was an exciting time. So this sounds like about the year 2000 through about the year 2007. What was it like to be there at Google, and what did you do? What was your early career when you were at Google?
Google was wild. It was such an extraordinary place filled with the most brilliant people. Even going back a few years prior, my first job in Silicon Valley was at Yahoo. And
that's right. Yahoo was before Google. So let's back up further and talk about being very early at Yahoo, right? Because when was Yahoo founded?
Gosh, I think, I know. I think in 1995, because they just celebrated their 30-year anniversary, birthday, whatever. And I joined in 1999. So still late to the party relatively. But I had left New York City. I was doing banking. I get this amazing job at Yahoo. And it just taught me that you can love your job. And I didn't think it was possible. And there was so much euphoria about the internet and providing all this information to anybody who had a computer. And I thought that was just so exciting. And there was also this ethos of meritocracy. No one really cared where you went to school, where you were from. They just cared, what are you building? What do you stand for? What can you build? What does the future look like? And that is something really, really special, I think, to Silicon Valley for sure. And so I worked at Yahoo for 3 years. I was a product manager on Yahoo Finance. And I thought that was so fun. And maybe one of the funnest things for me personally was that my dad had been a banker, and he just loved the Yahoo Finance message boards. I mean, it was just like the most ridiculous thing in the world. I'm like, Dad, they're all spammers.
But it was how people talk, because prior to that, there wasn't a way for people to really just randomly chat, say things about companies as investors who were largely amateurs and would just rant and rave, and you go on these message boards and kind of follow what people were saying. That really didn't exist prior to that era. I mean,
totally.
How would it have existed?
I mean, actually, it might even be like the first real social network, right? It shows you like how, there's a diamond in the rough. There's some really good content creators, and there's a lot of noise, and you have to really sift through the noise. And so our time at Yahoo was just very special.
But how silly did that feel, though? How silly did it feel going from Wall Street, which firms had names like Goldman Sachs and J.P. Morgan, Morgan Stanley, and now you're continuing your finance career, but you're working for a company named Yahoo. I mean, what did the people and that was, the internet bubble was taken off back then, but it was still very early in the rise of the internet. What did people in New York think about working for a company called Yahoo on their finance, products? They think it was pretty ridiculous.
It's so funny you say that, because I remember thinking in my head, because I was working on a trading floor, and it was so soulless, and I was miserable. I was working these ridiculous hours till 10, 11 at night, and having to take the subway back to my lonely apartment. And I remember vividly on the trading floor thinking, like, how fun would it be to work at a company called Yahoo? And instead of this miserable place at the time. And so I did. And there was just something really fun and uplifting and free about that. And because you're just creating this whole new path that had never existed before. And instead of a handful of people having access to this information on their Bloomberg terminals that cost thousands of dollars a month, any retail investor could get just about the same information in their pocket. And that was just really cool. That was such a great concept. and a great reality. So moving to San Francisco, actually it was Sunnyvale, which wasn't as cool as San Francisco, but just feeling that euphoria and that innovation and that willingness to take these leaps and building something interesting and useful for people was awesome. So after I left Yahoo, after my 3 kids were born, I had
actually, let me jump in for 1 second here. Yeah, I many times have gotten the question, where did the name Zayo come from? And if you think about Zayo, Yahoo, you could see some parallels. And that's not by coincidence. When we were building Zayo, it was post the telecom meltdown. The industry was still in its doldrums. People walked around like they didn't really know what they were doing, and regretted kind of that they even chose telecom as a career. And it was only beginning to start its comeback. So when we were choosing a name, which I was often criticized for choosing the name, I wanted something nostalgic. And what I meant by nostalgic was something that was catchy and vibrant and didn't sound like a telecom company. And it sounded like those companies that happened before the bubble burst, the names like Yahoo and Google. And so Zayo was kind of what we found, 4 letters. We could take it to the stock exchange. We could, it could stand its own right. It wouldn't be abbreviated by its, Z something else. But that's where Zayo came from. It came from wanting to create a vibe, a culture, an enthusiasm, a passion around what we were doing out of an industry that had kind of lost its way. So that was the inspiration.
For the first time, Dan Caruso pulls back the curtain in his book Bandwidth, a memoir that celebrates the pioneers who invented the internet's early backbones, the renegades who lit the fiber revolution, the antics that caused the biggest market crash of all time, and the new wave of entrepreneurs who led the industry back from its ashes. Though it seemed to happen in the blink of an eye, the Bandwidth adventure was a multi-decade roller coaster ride involving larger-than-life successes and devastating failures. The unbridled ambition of newly minted billionaires and high-profile tycoons created extraordinary value, unprecedented value destruction, and endless opportunities for a brave few. This reflects tech's past, present, and future, and is a story you won't soon forget. It will help you prosper during today's AI tech bubble. The book is available at dan-caruso.com/bandwidthbook and released in early 2025.
That's a great brand, and that's a great story. And I imagine, too, it's a great Scrabble score.
Yes,
right?
It is a pretty good Scrabble.
You really need to have a brand that has a good Scrabble score.
We're going to have to change the Scrabble rules to allow for names of tech companies.
Absolutely. Who do we call?
Yes. And before we move on from Yahoo, specifically, what were you doing when you were in the Yahoo finance? Like, what you're a product manager, what was your life like when you were in that role, and what specific things do you recall working on?
It was super fun because I could remember thinking, as a customer, as a banker, what were the kinds of information I needed access to, and how do I make that more readily accessible? So, for example, looking at just looking at the vitals of a company, like how do you make sure you can see the bid ask, the market cap, like all the different vitals of a company's performance, very easily available, looking at recent news, looking at the profile of the company, looking at competitors. And that information was contained in different places. So we would strike agreements directly with the stock exchanges, with Reuters, with AP, all the wires to get that news sucked in, with Hoovers to get all that company history, competitors, all this interesting information put together in a readily accessible page. And then working with designers to make sure that was easy to read. It was easily downloadable for people, integrating with spreadsheets. I remember as an analyst having to type in all the, the earnings that they came in. How could you get that, pulled in as quickly as possible?
Yep.
And so it seems really easy now, but at the time, it was quite laborious. And one of the things that we worked hard to do is NYSE's, I think, had a 20-minute delay, and NASDAQ might have been 15. And we pushed hard on trying to get that to real time. We were unsuccessful at Yahoo, but leaping forward to Google, we were able to get real-time quotes.
Mm-hmm. So I want to talk about one other thing that you mentioned. You learned when you went to Yahoo what it meant to have a job that was fun, that
Yeah.
you really enjoyed, and that is so important. But it's so fleeting for so many people. Talk more about that. More about kind of to the audience of the younger folks here who are trying to figure out their life. Maybe we'll talk to these two right over here. What does that mean? What does that feel like? And how would you advise kind of people who are trying to find that for themselves early in their career, find something that they really are enjoying what they're doing?
It is hard, but it does exist. And I think a few things, especially when you're in your 20s and you're early on, you're doing a few things. You're developing your skills, you're developing your brand, what do you stand for? You're developing your network. And those things compound over time, like finance, right? And so, like those networks, those brands, those skills.
Yep.
And so, finding those places where you can increase the odds of that happening. So, finding those innovative companies, finding those people. Ideally, you have both at the same time, but sometimes you don't have to necessarily. And so, what I tell at least my kids and other young people that I've met is like, look for those. What are those kind of rocket ships in your lifetime that you can jump on? Right now, I would say they're all in AI. Finding either those companies that are building tools that are AI native, or you yourself just become an expert in every single tool imaginable in AI. And that will help you both grow and learn and ultimately love what you're doing.
Yep. And pick an area that, as you're emphasizing, pick an area that's going to naturally grow significantly during the entire course of your career. Because if you're kind of in a environment where there's, where all ships rise, you still have to find your own path, but you're not trying to do it in an area that's flat or slight growth or maybe declining. But I would say there's a lot more than AI. I'm
Totally.
I look at space tech as an example of that as well. I certainly look at quantum as an early example, or an example that's earlier in its horizon. But there's lots of areas to choose from. Robotics is another area, and all are going to be interrelated to AI in one way or another. But that's great advice. And then there's one other thing you mentioned too, the contrast between where you came from in New York to where you went in the early Silicon Valley and the meritocracy that was there in contrast to the environment in New York. Talk more about that, not just how it was back then, but how that's evolved over time. Because there's still that, lots of environments where it's where you went to school, it's somewhat where you came from, that is very influential on whether you'll get a job or not. And then there's other areas that used to be meritocracies that maybe aren't quite the meritocracies that they once were. So how important is it to our society to be in a meritocracy, and where do you see that most being in place today, and where do you see some of the challenges that we face?
Yeah, it really isn't so important. And you're absolutely right. Like, I think above all else, you want to be on the edge, the edge of something that's growing. And there are a lot of these categories. Like, you just have to find that one that works for you, and finding that right time. And it's one of the things, when I talk about meritocracy and finding that in Silicon Valley, maybe just connecting the dots a little bit, it's something that I find here in Boulder. It's about who you are, and not necessarily what you do, but what you stand for, not where you've been, but where you're going, and finding those communities that really foster that and enable that.
Mm-hmm.
And they exist all around the world, but they just happen to be concentrated, I think, in a bunch of these communities that, both of us have been so fortunate to be part of. So seeking those things. Maybe I'll pause here. I want to make sure I understand your question. Can you repeat your question a little bit? I want to make sure I have a more coaching answer.
You stressed the meritocracy and how different it felt when you went to Silicon Valley compared to where you were in New York. And I guess I was asking you to kind of take that and bring it up to current day, which you already did to some degree. And how do you think meritocracy plays a role in kind of the health of communities, the vibrancy of kind of what works versus the effect of the opposite, which is where meritocracy doesn't play a role and kind of gets in the way of, I think, a healthy society.
Gotcha. So I have some bias because every day I work with early stage founders, but I think that there's a general theme that's not just within venture, but within our society, that it's not pedigree, it's potential. And finding people that, have learned certain things, but what is that fire inside of them that's going to allow them to build something that's really, really meaningful? And we're at this really interesting shift, right? Our universities, there's a lack of trust in a number of our institutions right now. And universities are one of them. And you're seeing a lot of people rethink, well, going to college is really expensive. Am I going to get a job after college that's going to help me pay these loans back? Are there other ways that I can learn, that I can grow, that I can build? And we're very lucky to live in this country where entrepreneurship is just a big part of our ethos. And if you have a will, if you have the potential, if you have the passion, you have access to markets to help fund these things, you can actually build something really, really meaningful. So I think we're in this really funny time that, again, like moving from pedigree to potential, that if there's will, there's a way, that you'll be able to build something really interesting. And I've seen this in Silicon Valley. I see this here in Boulder. We see this across lots of different industries. And I don't think that there's ever been a more exciting time to be able to build new companies in new markets.
Yeah. So get into kind of an interesting topic, maybe a little bit of a sensitive topic. So I think it's safe to say we are both believers, as are many others, in two things: meritocracy and diversity. So you believe in both, right? You believe that diversity is part of what makes, a community, makes a company, makes a startup, makes an investment firm, strong. Diversity makes it strong. But at the same time, meritocracy is extraordinarily important. Yet we're kind of at this strange time where diversity and meritocracy are kind of somewhat at odds with one another in the current discourse. In part because of the concerted effort to bring more diversity into parts of society that haven't been as diverse as they need to be. So if you go to a meetup of the hottest tech companies in Boulder, Boulder or Colorado, a community that's, I think, is known for its inclusiveness. If you go there, mostly what you'll see is, if it's a CEO gathering or a CTO gathering, mostly you'll see males, and mostly what you'll see is males that are either, white or perhaps Asian or Indian, but you won't see, you won't walk in there and see a diverse group of people unless people work really hard to try to solve for diversity. The same is true with if you go to an investment gathering. You'll mostly see people that aren't female but are male, and mostly, they'll be they won't look all that diverse. So we're kind of in this strangity of situation where we value diversity, we want diversity, we have for not just the last 2 years, but the last 20 plus years. Yet we're still kind of stuck in an environment where you don't see diversity when you walk into areas where most everyone who's there presumably would like it to look and be a lot more diverse. And now have the heightened situation where there's tension between the two concepts of meritocracy and kind of efforts to drive for diversity. First, does what I'm saying resonate with you, or does it sound like, well, I would kind of say it a little bit differently? Feel free to kind of, take it kind of state it in a way that, maybe is in contrast to some things I said. But how do you reconcile that, and what do you think we need to do to, that would lead to a different profile, 10 years from now?
I think what you're saying is fair. And I'm not just saying that because I'm on your podcast and in your house, but both things need to happen, right? Like both things make this ecosystem thrive. Like we need meritocracy and we need diversity. Both of those things can coexist. And I think where, maybe that tension is that I think you just have extremists on the edges that just are beating the issues down a bit, and it's just noise. And so, maybe zooming into at least the venture ecosystem, which I spend most of, my day thinking about, that, we back the best founders because they are certainly capable of building great companies. And we also make sure that we're looking at a wide cross-section of founders from diverse perspectives and diverse backgrounds, because we think that is also going to increase our odds of returning our funds. So both of these things can coexist. And I do think you have to be, and we have to be intentional about it, that if we just look at the founders that we know, they may look more like us. And that's not necessarily a good thing. So you always have to be refreshing how you think about things and make sure that, that you're looking all around the world, frankly, for the best possible people to build world-changing products. And so we do a lot of that. And maybe I'll kind of give you one example of where I think that intentionality has paid off. So I think this is in 2014, 15 or so. I was at Twitter and I was starting to angel invest. And I would start to see a lot of companies, and I would then receive the cap tables of these companies, which is just basically a reflection of ownership, right? And all of these cap tables were, pretty much consistent that there were only white guys. So it's just like white guys backing white guy founders, and just kind of reflecting that ecosystem. And I had partnered with a bunch of girlfriends and colleagues from Twitter. We called ourselves #Angels and basically became this investment collective. And we asked Carta, which was a leading source of these cap tables, if they could give us access to the cap tables that they had seen. And there were something like 6,500 of them at the time. And Henry Ward, who is a co-founder and CEO of Carta, which I happen to be an angel investor in, so that kind of worked out. He was really great and gracious about giving us access. And then combined with his data science team, we looked at the diversity on those cap tables. And what we found is that only 9% of equity across these 6,500 companies were owned by either women or people of color, just basically a non-white guy. And we're like, wow.
How were you able to see that? How was that information tracked on the cap tables?
And actually, one quick correction, that wasn't by race, that was only by gender. So 9%. Okay. So just looking at the names and inferring based on names that I don't think people at that time were self-identifying. But it kind of, we knew it was going to be bad. We just didn't know how bad it would be. And you can't manage what you can't measure, right? So we're like, let's at least get a lay of the land. Let's get one strong data point to understand where we are, at least by gender. And so we realized we're at 9%. Okay, based on that, what can we do to at least increase the odds of a more diverse cap table? And what we started to do is just like we published the paper, we explained what we saw, and we just made it part of how we looked at companies. And we would ask, oh, you're raising an early stage round. Have you thought about asking Vanessa or Vidya or Chloe or April or any of these other very capable investors of investing in your company? And people just became more self-aware. Have we moved the needle? No. Yeah. So that's a bummer. But I think it's still early innings. And I think, at least anecdotally, I see way more female investors. I see way more female angel investors. I see way more female founders now than I did when I started. So we're moving in the right direction. And it just took, I think, a lot of intentionality of being aware of some of the disparity, making sure we still had high standards. We didn't say, oh, well, let's send it to, Jane because we need a woman on the cap table. That's stupid. Like, no one's going to do that. But let's send it to Jane because she's a really freaking good investor. And she's going to add all this new marketing muscle, blah, blah, blah. And I think it's a win-win for everybody.
Yeah. Yet, if you look at it today, my guess is if you did the same analysis, there'd be progress. Maybe it'd be double what it was before, but it's probably still south of 20%.
Yeah. But that's okay. Moving in the right direction. Yeah. Like that, that's important.
Yeah. Yeah. Moving in the right direction and making, meaningful headway, important, but still a long ways to go. And I guess the general, question, which we can move on from right now is it just something that is going to take a lot more time, or is there things we can do differently, approach the problem differently, building upon some of the successes in the past, but that would increase the pace of diversity? Because even if you looked at who is getting funded, what companies are getting funded, you would be disappointed with the diversity, at least depending on what you exactly mean by diversity, because certainly there'd be a lot of founders from, I would imagine, from Asian descent or, from India. But in general, you'd see big gaps in diversity. But let's move on from that topic. But it is something that I know is important to you. It's been important to me as well for a number of years. And it's, I think we got to get through this period of tension. I think it's frankly, I think it's a good tension to have, because I do think the approach that we as society were trying to take was maybe being somewhat counterproductive in some ways. And you're seeing a backlash for that now, which could be a reset, not a reset on the aspiration, but a reset on what's the path to achieve the aspiration. So we talked about Yahoo. We mentioned Google. You just snuck in their Twitter. So you are one of the most unique people out there in that you were early at Yahoo, early at Google, and also at Twitter. Let's build our way up toward Twitter. Let's move on from Yahoo, move our way up toward Twitter, but now focus more on Google. So tell us about your Google years.
So Google was super fun. And again, Yahoo set the bar so high that you can love your job. I couldn't imagine that Google could be that much better, but it was. There was something very special about Google at that time. I joined in 2003, and it was before the IPO, and the company was just on a tear. And there's something also, I mean, this is an important lesson too, which I've talked about with my kids as well, that the people you surround yourself with are going to either lift you up or tear you down. And the community and my cohort at Google was just off the charts extraordinary. And this is where I just got really, really lucky. So the people that I got to work with who were other PMs, Elad Gil, who I think is a phenomenal investor, Chris Zaka, Sundar Pichai at the time, who was a business product manager.
Wow.
Now, obviously the CEO, Marissa Meyer, Susan Wojcicki, all these incredible, incredible people that have gone on to lead all these other amazing organizations. So I just got really lucky about that cohort. And I think the other big thing is that I just learned what great looks like. And I think in life, and especially in venture, it's a lot of pattern matching, right? And it's like just understanding what makes a website great, what makes, an app great, what makes a human great. Like, how do you make very good decisions? And so it was very hard work, very long hours, but it was so meaningful. And just seeing Google grow so quickly and the appetite for risk taking, saying that anyone in the company could work on a 20% project, as long as it was meaningful and thoughtful and smart. But that willingness to take these risks, which led to things like, even YouTube. Obviously, YouTube was a big acquisition, but people were starting to dabble in video before video really seemed like a big deal. So that was really extraordinary. And the quality of people is just so high. And one funny anecdote story with my kids, because my kids were little at the time, and I worked so much, and I would leave Google to pick them up at daycare no later than 5 because they would charge you $1 per minute per kid. So I was always on time. I get the kids.
$1 per minute per kid.
So, I mean, it was just
Silicon
like
Valley ways,
complete extortion, like Silicon Valley was
but giving you an
expensive.
incentive to be on time.
Yeah, like you had to be on time. And I would, pick them up, and sometimes I would still have a meeting at work, and everyone's very friendly, and I would bring the kids over, and they would kind of play and run around, and Google would have free food, and then we'd go to dinner at Google. And so my kids just had this thought that like, Google was for dinner, which probably wasn't really the real intention of having free meals at Google, but everyone's very generous. Anyway, so, but it was fun for my kids to just kind of grow up ambiently in these companies and these cultures and see the enthusiasm and the rigor for building something great.
Yeah, part of my career experience at level 3 and at Zayo was serving the Silicon Valley tech companies. We were the fiber and the bandwidth behind a lot of those companies. They would certainly steal our employees, who would then build out the networks for if you look at all of the big tech companies, a significant portion of people who build out their networks and run their networks have come from level 3 or Zayo or both. But in any case, they would be our most important customers as well. So I would spend a lot of time kind of going around Silicon Valley and go to Google, go to Yahoo, go to Uber, go to Tesla, meet their network people, but also see their companies. And it did two things. One, it made me extraordinarily jealous that I didn't get to live that career. I'm like, man, these are such cool environments. Each had its own kind of way of doing things that was different. But they all had kind of an energy, a vibe. And you could tell when they were hot, and you could also tell when they were struggling. So it made me jealous that I didn't really get to see that, but also inspired me to bring as much of that, particularly to Zayo, as I could, to make that part of the Zayo culture, to try to create similar vibes. We headquartered, first on Pearl Street when we were really tiny, but then a little bit later on, we headquartered in the 29th Street Mall and had multiple locations so that you could flow right out of your office into kind of the outdoor kind of trendy mall area. And it helped create the vibe of Zayo and tried to use a lot of their other techniques. But man, what an experience that must have been, going to from one iconic culture to another iconic culture and being there early on and in their heydays.
It really does set that bar high. And I give a lot of credit to Eric Schmidt, who was such a thoughtful leader during this, for a very long period of time. And, he's credited as being the adult in the room. And, but he really was, he's an intellect, and he's very smart, and he's very thorough, and just lifted all these people were brilliant and great at everything that they did, but just even lifted them up even higher and got everyone to row in the same direction. So
how did he get them to row the same direction? That's very difficult as a company scaling up.
Yeah. And it's a characteristic that I feel very lucky to have seen in a couple of different iterations. It's one thing to be very smart. There are a lot of smart people in the world. It's another thing to be right. And that's sort of overlapping, being, smart and right. But then even right in the middle of that Venn diagram is the ability to orchestrate everybody else around you to be smart and right and do that in the right direction, in the same direction. And that was something that Eric was just uniquely qualified. He kind of knew everybody's position in the room. And we would go and present our ideas in this team meeting called EMG, the Executive Management Group. And it would be Eric, Larry, and Sergey, and all the different leads of the company. So Jonathan Rosenberg from the product side, David Drummond from the legal side, Urs from the engineering side. And Eric just had this unique ability to know everybody's position in the room and a way to kind of get people there, not through necessarily consensus, but what is the right thing for Google at this particular time. And I would be terrified every time I would go into this room because everyone was just like rocket scientists, so smart. And I remember presenting once about Google Finance. And I was like, I helped build Yahoo Finance, and it's the leading product in the world. And Google's even better. And Google has this ability to build the world's best financial product. And I know exactly how to do it. And I remember presenting into this group, and Larry basically was like, this is stupid and don't do it. And I was devastated. And I thought, oh my God, this isn't stupid. This is a really good idea. And both Eric and Jonathan Rosenberg, who was my boss, kind of pulled me aside, just come back with more data and don't let this set you back. So I thought, okay, and worked with the engineers. We got the data, we did the demo, came back 3 months later, presented it. And Larry, of course, was like, why didn't you launch this already? I couldn't win. And Eric was like, you did the right thing. And I remember asking him a little bit later, because I noticed during that meeting, he was just kind of on his BlackBerry.
Asking him being,
asking Eric, like, what really happened? Like, what could I have done better? And, what made the difference here, just so I can continue to learn. And because I remember during that last meeting, that Eric was on his BlackBerry at the time, and he seemed disinterested. And I asked him, what was different? He's like, your tenor. You just came in more confident, and just make sure that your tenor is where it needs to be. And it's just kind of a random missive maybe from him, but something I think about as well. So kind of connecting the dots a little bit. That was a long answer, but Eric kind of knew everybody in the room's position, and he just had a way of pushing things in the direction that they needed to go, which I really appreciate. And he was just a remarkable leader.
Okay, so did you go directly then from Google to Twitter? Is that?
So this is where I made my decision. No, I was going to leave Silicon Valley to work in government.
That's right. That's right. Yes. We hit that earlier.
I do believe in public service. I do think it's really important. I'm very glad I did it. And so it's one of those things. So two things happened. So decided to leave Google. The Obama administration made us sell any of our tech stocks. So I had to sell everything there. But I was also trying to decide if I should join Twitter. It was a 26-person company at the time. I had known Ev Williams because he had sold his last company to Google, and he was one of the founders of Twitter, of course. And he was like, yeah, come on over. And then I was like, this fork in the road, what should I do? I've always wanted to, serve in government at the federal level. I think Obama is really interesting. He's this, very remarkable, president. And so I decided to do that, of course. So I do that for a couple of years. And it was fantastic, this front row seat to history, but I really miss building. I really miss Silicon Valley. My family missed California. And so I called Ev back a couple of years later. I was like, do you still have this other role for me? He was like, absolutely. Why don't you come and figure out Twitter internationally, which was, to be honest, the job of a lifetime. I studied international affairs. I loved using Twitter. I'd been using it for a number of years. And the idea of planting that Twitter flag in all these different markets just felt like a dream come true. So we moved back to California, and I worked at Twitter.
Gotcha. So I actually met, did you know Don Gibbs by chance?
I know who he is, but I don't know him.
Yeah. So Don was a close colleague. He got to know President Obama well before anyone else did. Was part of the inner circle when President Obama decided to run, and then he went to the White House. I don't think he sold his level 3 stock, by the way. So I don't know why you had to sell and he didn't have to sell. But
yeah, that's a very good question.
Put in some kind of blind trust or something. But in any case, I was invited to the White House once as part of a bill signing of making it easier for tech companies to go through the IPO process. And I went there and I wore a suit, but I didn't wear a tie. And when President Obama came down the line greeting everyone, he kind of gave me like a strange look. And I think it was because I didn't have a tie on, which is kind of a weird story, but I'm like, why else would you give me a strange look while he's shaking my hand, like perplexed, like, what are you doing here? Other than the fact I didn't have the tie. I was trying to look more like a tech guy and not like a suit kind of guy. So kind of backfired, I think. So every time I look at the picture, every time I look at a picture and see me shaking his hand, I'm like, why didn't you have a tie on? So anyways, strange. How long did you stay in Washington? Was it
2 years? Well, 18 months.
18 months. Yep. So what was the early Twitter like? Because Twitter was still very early at that stage. I mean, it was, maybe 18 months after you could have joined, but still very early. How was that environment?
Pure chaos. Twitter, Twitter was so fun, but so chaotic. And primarily because we had so many changes in leadership. So literally 2 weeks after I joined, we moved back to California. Ev is the CEO, Dick is the COO. And 2 weeks later, Ev steps down and Dick moves into the CEO role. And so that was just like, seismic shock number one. And I love both of them. Like, both are great and very different leaders, but both awesome leaders. And so, anytime a company goes through a transition, there is, some swirl. But then, that era of just pure growth. And at the time I joined, we didn't have any offices around the world. our global audience was growing faster than, our US audience in certain markets. We had a very small sales team. And so just that sort of like that turbulent growth was both exhilarating and exhausting at the same time. The people around, again, it's all about the people you spend time with. The people around us at Twitter were just extraordinary. It's a different type of culture. So Google was very cerebral and very grounded in computer science, and Twitter had a lot of that, but also had a very like hacker culture. Just get things done very quickly. We'll figure it out. We'll solve this urgent problem later, and just kicking the can forward, which will come back to bite you at some point. But I was really surrounded by the most amazing people who have become these lifetime friends. And I'm going to jump the gun a little bit, but fast forward that the head of engineering at Twitter is a guy named Alex Redder, who I loved working with. He was the smartest person in the room that never acted like it, that people would come in with these, very detailed explanations of where, a product should go. And sometimes you understood it, sometimes you didn't. But Alex was the person in the room that would repeat it in the most simplistic format that everyone in the room understood. I was like, oh, I love working with Alex. So fast forward a number of years, Alex leaves San Francisco for Boulder. And now Alex and I are partners at Moxxie Ventures. So anyway, I want to kind of plant that seed there. So anyway, so the folks at Twitter were really phenomenal. I was fortunate enough to help open our offices in Japan and the UK and France. I was able to live in France for a year with Twitter, which was so idyllic and wonderful. And Twitter has taken a lot of twists and turns since then. So it's still, I think, a very unique product. It has such longevity. We used to joke, it's like a cockroach. Like even if we wanted to kill this product, we couldn't. It's just going to live on forever.
Mm-hmm. Yeah. So part of the theme of our podcast here, the VeriWorks podcast, is to celebrate those in Colorado who are the difference makers, to celebrate them, to recognize them, and to build more momentum for Colorado itself. And I've told a lot of people in the last several months that you are a hidden treasure for Colorado. Moving out here as a venture capitalist with the background that you have, hidden because I think most people don't realize that you're here. They don't realize who you are. Even people who know you probably don't know the depth and breadth of what you bring to the table. Maybe I'll help change that going forward. But Colorado's community as an entrepreneurial community is well established. I think we're rated number 5 right now as a community, but the difference between 5 and 10 is kind of you could go from 5 to 10 pretty easily, which means you go from 10 to 5 pretty easily. Going from 5 to 4 is a big jump. 4 to 3 is a big jump. Working your way up to Silicon Valley is a gigantic jump. But we have good momentum. So we have good momentum, and we're inching ahead of some of the other areas. But I think when we have people like you come here, continuing forward in your career, and in your case as a venture capitalist, now your geographic focus is broad. You're not focused on Colorado, but being in the community and being a venture capitalist in the community who has the background that you have will help our community significantly. So I do want to take that pause during this, and as we segue into your role in Colorado, to celebrate the fact that you're here, and your firm is not 100% here, but you're here. You're representing your firm here, and you're doing just great stuff. So let's now get to your venture capital. Yeah,
I appreciate
and
that.
thank you so much. So let's get to your career as a venture capitalist. You started to touch on that with Alex, and let's start by talking more about your partnership with Alex, how that came about. Did you say he moved out here as well?
He moved out here first.
Okay, I didn't know he was out here. For some reason, I thought he was still
He's
in San
another hidden
Francisco.
treasure.
Yeah, so we got to unhide him as part of the effort. But tell us about your partnership and the circumstances that caused him to move out here, and then you being out here as well, and what your firm's all about, what kind of companies you invest in, you have invested in. So bring us up to speed on your venture capital chapter of your life, which is your current chapter.
Great. No, thank you so much. It's really an honor to be here. And so my career in ventures started really organically. So while I was at these amazing companies, especially at Google and at Twitter, I was surrounded by all these great engineers and operators and who would often peel off and start their own companies. And I thought that was kind of interesting. I had this amazing network without realizing it. And so Chris Sacca was the first investment I ever made as a venture fund. And there was another friend of mine at Google named Sumit Agarwal who started a cybersecurity company called Cheap Security. And pattern matching, thinking this guy is so smart. He's got great hustle. He has founder problem fit. He worked at Google in cyber. And then when I worked in the Obama administration, he joined too. And he worked in the Defense Department. And then he came back to Silicon Valley. So anyway, so those were my first two investments. Fast forward to Twitter, I started to see more and more of my former colleagues start companies, or someone would send me a potential deal. And two things happened. One was I had these girlfriends from #Angels and we would share deals. And the second thing was one of our board members, Bijan Sabet from Spark Capital, invited me to be a scout. I was like, what's a scout? You get to write any check you want. And like, what happens if I blow it? No problem. Like, what happens if it becomes, a great company? Like, great. Like you can participate in the upside and we'd love to see that Series A. So it was just such a great opportunity for me to have more at-bats, if you will. So I do this for a number of years and I realize I love this. What like a privileged position that you get to live in the future. You get to be a professional optimist and find these companies and help them grow. And so decide, I should do this. Maybe I should join a VC firm. And so I talked to Bijan. I talked to a couple of other firms, and Bijan and Chris Sacca especially were like, can I curse here?
Sure, absolutely.
Okay. Both of them basically were like, what the fuck are you doing? Like, why are you talking to VC firms? You know how to do this. Where's your courage? And I realized, I guess, where is my courage? And that's why I decided to call it Moxxie. So, where's my courage, but also
that's interesting. So,
So backing the courage of founders, because it takes so much chutzpah, right? It takes so much conviction and confidence to be able to start something yourself. And then I did the double X for the female chromosome. So,
nice.
That's the origin. And also I could get the URL.
And it's also a catchy name, Moxxie Ventures.
Good Scrabble score.
Yes.
Right? Like you need to have like.
Not as good as Zale.
Yeah. So, and that's good as Zale for sure. So that was my pathway to starting Moxxie. And it really is a privileged business, right? That you get to become a learn-it-all versus a know-it-all, right? You're just constantly learning. You're constantly exploring. You're constantly finding the outliers that you think can, make a positive impact in the world and also return your fund. And so, I started Moxxie about 6 years ago in San Francisco in the Bay Area. And Alex, going back to Alex, he is such a great operator. He's such a great engineer, went to Stanford for computer science, was an early engineer at Google. And he also happens to be a pilot. And so after Twitter, he was the president of Kitty Hawk, the electric flying car company. And I had asked him, would you like to do Moxxie with me? He's like, I can't. I would like to, but I can't because this is basically flying electric or flying computers. And I have to do that. It's an intersection of aviation and computer science. So great. But he said, I will help you for Fund One. So he did. So I started Fund One by myself. It was a $25 million kind of get started kind of fund.
And that was what year again?
That was 2019.
2019. So
terrible vintage.
So about 6 years.
So right before COVID hit. And but the thesis has remained the same, which is basically software solutions to hard problems that help a lot of people. And we invest in pre-seed and seed companies for Fund One because it was such a modest fund, looking for maybe 3 to 5% ownership. And by the time I got ready for Fund Two, I decided to come out to Colorado. It was still COVID. My daughter was going to CU, so Sco Buffs.
Yes.
And I wanted to spend some time with her. Alex had happened to have moved from San Francisco to Boulder maybe 8 years ago. So he had been here for a couple of years. And I wanted to spend time with Alex to talk about Fund Two. And Foundry, which happens to be one of our largest LPs, was out here. And I've always loved that team. And I wanted to spend time with them. So in 2020, drove out here on a road trip with my dog Taco in the car and really thought I was going to be here for a month and rented this Airbnb to see my daughter, to talk to Alex and to talk to Foundry about what Fund Two would look like. And the more I stayed, the more I realized how much I loved Colorado. It has a lot of the properties of the Bay Area, the optimism, the meritocracy, the love of the outdoors. and a great network, just smaller. And Greg, just pulling in Greg here, he and I had been dating for a long time, long distance, and he had come to visit me here, and he thought, I can't move to San Francisco. You can't move to LA for a variety of different reasons, but I think I could move to Boulder. And I want to move here with my kids, and we can kind of join forces in Boulder. So that was a genesis of just my personal relationship with Greg here, and then Moxxie here. So Alex decides to join me full time. We start raising fund 2 and just basically plant the Moxxie flag here in Boulder. And that was, a little bit different, coming from the Bay Area, and had to, talk to our LPs about that. Obviously, I go back and forth to San Francisco and the Bay Area quite a bit because it is, this, nexus of entrepreneurship. But there are a lot of great founders in different parts of the country, here in Denver, Boulder, in Austin, in LA, in Miami, some in Miami, and a ton in New York too. So this sort of middle ground has afforded me the opportunity to travel actually a lot easier to all these different places, and also do this job remote. And we've hired a few other people, other investors in San Francisco, to help us have boots on the ground. And now 6 years later, we're about to invest in out of our third fund, Moxxie 3, which is $95 million, which we're really proud of. And it's been really, it's hard work, but it's really it's joyful, it's hard, it's rewarding, it's fascinating, and we just made our first investment in a Boulder-based company, which I'm very proud of.
Oh, congratulations! So Fund 2, how big was Fund 2?
85.
And that was what vintage year?
2021.
Yep. So to raise Fund 3 in this environment is very difficult for any but the top branded firms. One, because of liquidity in general. Most are waiting to see liquidity start to break to commit to new funds. So that says a lot that you're able to raise a $95 million fund in this environment. So that's a big deal.
Thanks. That's hard.
Yeah, it's very hard, but you were very successful doing it. So so maybe talk about some highlights from Fund 1, Fund 2, and then we'll spend more time talking about Fund 3 and where you see that going. And actually, before you even go there, I want you to go back to something you said. And I'm going to misquote your words, but I want to come back to the words you use if you can remember them. I get to live in the future. Or is that the word?
Yes, yeah.
So as a venture capitalist, you get to live in the future. Bring that statement to life. Tell us what that means to you.
You really are. Each of these investments, we assume are going to take a long time to take off, right? So you have to think about, okay, over the next few years, what will that future look like, and how is this founder painting that picture? How, is he or she taking us there? If it's something that solves maybe an immediate problem, that's interesting. But if it's like, hey, one day you are going to drive in a driverless taxi, that's bonkers, right? Like 5-10 years ago, that was a bonkers idea. Or, hey, you may one day want to sleep in some stranger's house that you're going to rent and sleep in their bed. That's bonkers.
Yeah.
But Brian Chesky brought us into that, that future and that reality that there's no going back, right? Like Airbnb is like the best product ever, I think. And Waymo, it is so joyful to now, every time I go to San Francisco, I would never order an Uber. I always order a Waymo because it's so delightful. And so we apply that framework about living in the future, the products that we see today. How does that help us live in a better tomorrow? So it doesn't happen all of the time, but I think some of those investments that seem so weird are the ones that are likely to be the biggest outliers. And so going back to your question, what is that? Some examples of that, at least for Fund 1, is a Denver-based company called Limitless. And I think you know Dan Soroker.
Yes.
And
I've met Dan. I brought him to a basketball game with some of the other emerging AI crowd. And yeah, he was able to bring me up to speed on what he's doing. But yeah, tell us about what he's doing.
So Dan, kind of connecting the dots back again, Dan was an early product manager at Google who I was lucky enough to overlap with. I think he was right out of Stanford at the time and he's just great. he is excellent. He is excellent at everything he does. And he also joined the Obama campaign, not the administration, but we overlapped a little bit there. He went on to build Optimizely, which is an A/B testing platform. And so he knows what great looks like. And he's one of those founders and serial entrepreneurs that there may be 5 in my mind that I would give a blank check to and say, like, I don't even care what you're building next. You're going to bring us into the future. And so when Dan was building at the time a company called Scribe, it seemed like a good idea, basically taking notes from your meetings, which is now very commonplace. I don't know if you do this on all your Zooms. I do by default.
Yes.
At the time, it felt bonkers. Like, I don't want this little robot taking notes for what I'm saying. What happens? What if I say something stupid? But now it's become almost standard, at least in venture. When we talk to founders, we always have a recording of it. Anyway, so Dan built, at the time it's called
It's
Scribe.
not just recording, it's then a summary of it so you could access it
Take
in a very
notes
efficient way.
and like it gives you perfect memory.
Yeah.
And so I was like, okay, no matter what you build, I want to back. And this also happens to be a kind of bonkers, but good idea. Let's do it. And now fast forward, the company is now limitless. And I usually do have my little pendant on, but I don't now because I don't want the feedback. But this idea that you can actually do this IRL with people. Now, most normal people are like, take that stupid thing off. Like, I don't want to be recorded. Is that legal? But you can see this in instances when you're at the doctor's. What if you have some terrible diagnosis and you're not in the frame of mind to remember everything? You want that recording. If you are, he had given us this one recent anecdote that there was a parent at the playground who happened to be wearing this, the Limitless pendant, and it captured the first "I love you" from the child. Like, that is endearing. That's, awesome. So Limitless is one of our investments from Fund One. It's something that, Dan is living in the future and helping us, have the world's most perfect memory. And maybe another one from Fund One that I'm personally really excited about is August Health, which is software for nursing homes. And I don't know if you've ever had a loved one in a nursing home. I've had a number of my grandparents and my dad happened to be in Denver in a nursing home. And the whole process is underwhelming, to say the least, right?
Yep.
It's sad. You're sad that you're losing your independence. You're sad that you can't take care of your loved one. And adding on to all of this is the paperwork. And something like 75% of nursing home admissions are done by paper. And so August Health wants to solve that. How do you make it just so simple to bring in, your new resident? How do you make it easier for your loved ones on an app, on a laptop to be able to communicate, to understand their medical needs and what happened that day? So this team is just really extraordinary. They're split between Seattle and San Francisco, and they're just raising their Series B right now. So we're really excited about that company. And then another another Fund One company that we're really excited about is Overstory, which is AI for vegetation management. We see this in Boulder, the challenges of fire. We've seen this obviously in the Bay Area. We've seen this most recently in LA. And something like 11% of the fire damages caused are from utility companies, and 50% of the economic damage is because of utility companies. And so what Overstory is trying to do is provide software solutions to utility companies to help them manage all of their vegetation across all their power lines.
And by vegetation, it'd be trees that are, getting too close to the power lines.
Exactly. Like, you've got all these junipers, which are pretty flammable, and they're right near, this potential power line, which gets, X amount of wind, all the time. And a lot of that is done quite manually. Yep. And this team is based in Amsterdam. So talk about distributed, teams. And
do they apply that to the telecom industry? Because telecom industry, if trees are, there's still a lot of aerial lines, fiber and copper above you, and they have to trim the trees so that the trees don't knock over the lines.
Exactly. Now I know a guy.
Yeah, I would think that would be very applicable there as well.
Yeah, exactly. So right now they started with utility companies, but the goal is to expand to telecom, to insurance companies, to landowners. just so we can better predict and prevent damage before it happens. And so that company is now on a tear. And it's something that here is software that can provide a really meaningful solution that is going to help a lot of people. And we're not going to be able to prevent fires. They're going to happen, but we can at least get ahead of the damage that they can cause to a lot of vulnerable communities.
Yep. And then, so those are a couple of fun one. Anything to share on fun two?
So I have a really fun one for fun two.
Yeah.
So we invest in a company called Throne Science, which is Whoop for
Love
your
the
poop.
name.
Yeah, Whoop for your poop. And it's a device
Oh, yes.
that you put in your toilet that takes pictures of what's going on to measure your gut health. And I'm really fascinated by the consumerization of healthcare. We were talking earlier with your team. Everyone's got an Aura ring. You're an investor in Aura, and how that has changed. That people are willing to both pay for products that can keep them healthy, and do things that can prevent bad outcomes. Right? We look at the success of Function Health, and man, I wish I'd have been an investor in Function because I think that's such a great product. But there are all these different ways that we can be more proactive about how we're doing. So Throne is one. This team is based in Austin. Incredible founder. It's very, very early stages, but love this team. Spellbook is another company in fund two that is AI for lawyers, and this one is on a tear. Now, this one is one living in the future and also. So is Throne Science, by the way.
Yes.
Like I never would have imagined having a device like this in my house, but now I think it's awesome. Anyway, so Spellbook, when I first saw it, AI for lawyers, it's a plugin that lawyers have in Word because that's commonly what they use for their day-to-day work. And it's AI to help both create your contract and to look at the red lines and see what might be off-putting, what are the issues, what are the things that the clients have to think through, the business decisions and so forth. And when I first saw it, it was counterintuitive. I thought, why would a lawyer want a product that's going to make their job go faster? Because they bill by the hour. They're going to want slower, bigger bills to send to their clients. But in contrary, of course, lawyers want to get through their work faster. Of course, they want their work to be better and higher quality, that they can deliver a better product to their clients. And when I started calling a number of lawyers that had been trialing this product, they were like, I love this product. I can't live without it. Don't tell the founder that they're not charging enough. I'm like, of course I'm going to tell the founder. It's like, this is awesome. So this was a team based in Toronto. And again, not in San Francisco. And I think they have an excellent product that customers love. They can't live without it. Their retention is sky high, and they're just growing really fast. So I'm hopeful that this company is going to be one of our fund returners, and really excited by the way that they're building.
Great. And then the lawyer comment, even if 80% of the lawyers didn't want it for the reasons you described, the 20% that do are going to make the 80% that don't irrelevant before too long, because in AI being introduced, those who lean into AI are going to have such an advantage against those who either don't or are having trouble doing so. It's curious in your soon-to-be husband's business industry, how they're trying to slow down AI playing a role in the production of content from a Hollywood perspective, at least. And it just strikes me that they're setting themselves up to be leapfrogged, to be kind of an industry that's affected by the innovator's dilemma, because they can't control others from using AI for content. And it's going to make Hollywood struggle to compete in the future. That just seems to be common sense. I don't know what their answer is to that, but those who are having trouble embracing AI, even if you could understand the reasons why they're reluctant to do so, or the reasons why they're having trouble doing so, they are at risk of being the next, dinosaurs out there.
I totally agree. And you also touched on something really important, that it is better to have a small community, even if it's at 20%, who absolutely love your product, than just being kind of liked by a lot of customers. Mm-hmm. And we see that with Spellbook. even with Aura, you're not going to get every American to wear an Aura. But if you can find that hardcore minority that live without it, who are not going to benefit financially from talking about it on a podcast, like get those people who love your product that are going to evangelize. That's when you've built something really meaningful.
Yep. We're going to spend a lot of the rest of the podcast talking about your kind of visions for the future. But I want to come back to something earlier that kind of was a thread I think is really important to bring out, and something that I wasn't good at, and it sounds like you were exceptional at. And that is how to authentically leverage relationships throughout your career, how to find those people who, are in and around you that you can respect, you can admire, but when you tell the stories, you bring out a vulnerability that you were able to, show. Like, I want to hear your advice on how I could have done better. I want to learn from you. You've brought that up multiple times, and it's and there's probably a lot of people like me who have trouble doing that. We don't want to admit what we don't know. We don't want to admit what that we might value the advice of someone else. We'll listen when they're saying it, but we won't open ourselves up to it in a way that makes it sound like we need it. But you seem to bring that up multiple times, that you were able to really benefit from others along your journey by opening yourself up to them and making it easier for them to help you, and probably make them want to help you even more because you've expressed the desire to receive whatever help they might be able to give. Talk about that part of who you are and how that has helped you in your journey.
I mean, first and foremost, relationships are everything, right? And, it's kind of a personal lesson and a professional lesson that you will reflect the 5 people you spend the most time with. So choose wisely, right? And so finding those people who lift you up and make you a better version of you. And I think, at least for me personally, I'm not the smartest person in the room, but I will work the hardest. And it might take me a little bit longer, but I will get there. And I think that kind of hustle and hard work just does pay off. Like, even physically, like, you work out, you feel great, and you work out mentally and spiritually, like, you will feel better. And making sure that you're surrounded by those people that will push you forward. Venture is a hard business for a lot of reasons. And to oversimplify, it's very transactional, right? And there are givers and there are takers. And it can be very frustrating when also you realize, I've been kind of taken a lot, I've given to this, team or whatever. And you feel like, I feel no one likes to feel used, but everyone loves to feel empowered and where they've been given something that's important and it's going to help them grow. And so I don't really overthink that too much, but I do think that, when you've contributed, when you've invested, and when you've given a lot in these networks, that it will come back to you. And if you take a lot, if you're not a good person, that will also get back to you. So I think about it in that way, I guess. I also think too, so much of, at least where we are in early stage venture, it's working with often first-time founders that haven't had a few decades of pattern matching or connectivity or network. And when we can bring something to that founder's experience, that can be magical. And it's magical for us back because we realize, like, oh, wow, I'm so glad that was helpful to you. So I'll actually give an example or 2 examples. One is a company called Pharos Health that we invested in for fund too. And it's using AI for hospital reporting. It sounds really niche, but it's something
It's gigantic.
Yeah, it's gigantic, right? Like, that hospitals have to report on the quality of services given to their patients. And something like 300,000 patients in hospitals will develop sepsis and diarrhea, which is completely preventable, right? And so this team, their global team, they started out in the UK, moved to San Francisco, did YC, but we found them before YC, thank God. And but this team is just like phenomenal. So Felix Braun, the CEO and co-founder, he's a giver. And he works hard. He's so smart. He has this depth that very few people have. That if you ask him about hospital reporting, he can go up and down. You ask him about AI, he can go up and down about the ins and outs of AI and hospital reporting. You ask him then, we had this lunch the other day, we talked about tariffs, fully fluent on all things tariffs. And then he starts talking about crypto. This guy, like, he's just a polymath of things. And it's so important, I think, in venture. Anyway, but he's new to Silicon Valley. He doesn't have a network in hospitals and administration. I don't have a huge network there, but I have some, and we start where we are, right? And we use what you can. And so making those introductions and building those relationships for him, I think adds a lot of value, makes me feel great as, a partner on, his journey too. And I think I think that's just really, really important, and rewards the entire ecosystem.
Yep, absolutely. And one thing that many of the really good kind of early stage CEOs, one problem many of them share in common, certainly I was in this bunch, is they can be a stubborn group. They can be a group that doesn't want to show their vulnerabilities. They can be a group who wants people to see them as very decisive. Now, the real good ones can be that, but also, and I think we've got most of the most successful entrepreneurial CEOs that would come to mind share certain aspects of that characteristic, but they also share the ability to pivot, the ability to kind of, even if they had to express themselves in a way like, this is that mountain we need to climb, and here's exactly how we're going to climb it. You go see them the next week, and they'll be like, oh, I didn't really mean that mountain. I meant that mountain over there, and we got to take a slightly different path. So they don't get caught up in the fact that they can't change their mind, yet they don't always embrace kind of input and feedback and relationships in the way that you're describing it. At least they don't do it overtly. Maybe they do it covertly. So I imagine that you, as an investor with CEOs, they'd be more quick to let their guard down, more quick to invite you into their tent and welcome you into their tent, because that's hard for a lot of kind of really good early stage CEOs, because they also are careful about how to trust people around them for whatever set of reasons. That's just a characteristic that comes along with kind of being the profile of an early stage CEO. Not always, but often.
I agree. It's hard to be vulnerable, right? Mm-hmm. And to admit your shortcomings or your mistakes, or where you have, maybe you feel like you've disappointed somebody. And it is something we tell all of our founders, that we want to hear the bad news early. And because that gives us the best opportunity and chance to maybe fix it and make it better. And for us too, it's taught us to have those harder conversations earlier. If things aren't really working, let's figure out a path forward. Because the other thing is that I think a lot of people don't think about is the opportunity cost of your time. Mm-hmm. If you yes, you want to be persistent and keep grinding, but if the data isn't there and the customers aren't there, you are just beating your head against this wall, and it's not good for anybody. And most of all, for that founder, there are other things that you could be doing. Mm-hmm. And then, maybe the brighter side, and this is maybe on the more personal, I've lost a lot of loved ones earlier in my life than maybe others. And I think when you see that's really bad, nothing's worse than losing someone that you love, that it gives you some perspective. If you did a bad job in a meeting, what's the worst that can happen? You've already seen something worse, right? So I think, life will give you these perspectives of, what's the worst thing that could happen if I shut this company down? That sucks, but I will move on, and I will maybe be a better founder the second, third, fourth time.
Yep, exactly. So let's talk about your thoughts of the future. We're in an environment, we both lived in environments where the world has changed dramatically, but I think it's safe to say the dramatic change that is in front of us is more intense than what has happened in the past. The way the world will be 20 years from now, 30 years from now, is more different than today is from 20 years ago. When you were doing your pitch for Fund 3, certainly part of your pitch was look what we did in Fund 1, look what we did in Fund 2, look what we did in other parts of our career. But part of the pitch too is here's what we're going to invest in. Here's the ideas we're going to invest in. Here's our visions for the future that we're going to look to intersect with how we do investments. So whether using that as kind of context or just using kind of learnings you're getting as you travel around and have discussions around the future of AI and the future of other technologies that AI will intersect with, help us imagine what the future might look like from your perspective.
My most optimistic view of the future is, where AI can most dramatically impact our lives. And the two categories that I personally am most excited about are in climate and in healthcare. Big TAM. We all want fresh air. None of us want fires. We all want to live longer, but also live better. And I see so many great entrepreneurs trying to tackle these challenges, from, what Overstory is doing to help us better manage and prevent fire damage, to, things like Whoop for your poop. What are the things that, we can do to better stay forward and positive about our health. So for example, there's probably going to be a world where we don't have general practitioners anymore, that when you go to the doctor, the first thing you're going to do is check your phone and see, well, I've got a couple of these devices going on. I've synced my Aura, maybe my 8 Sleep, maybe my Elamind device for your head to measure like how you're sleeping and how you're dreaming, to your Throne Science, to all these different gadgets and your Apple Watch. And it'll give you a real-time read of how you're doing. Maybe something's off, and you've had your blood checked a lot more regularly. You can see the effect of, your diet, all these different things. So the days of maybe going to your doctor for an annual physical is going to feel really, really old. That you have a much more real-time pulse of how you're doing, and you have the best opportunity to prevent bad things from happening in the first place. I'm also hopeful that's at a micro scale. At a macro scale, we move from this like sick care system that we're in to a true healthcare system that, we see people, we're able to find and treat diseases more effectively, that you can use AI to better detect the earliest stage of cancer before it has a chance to metastasize. So I think that's really exciting.
And we're already seeing signs of AI be able to, I was reading something very recently about AI's ability to detect, I think in this case it was prostate cancer, before there's any other signs of prostate cancer, way before your PSA starts to do something. It starts to make sense of the information it's seeing, and with very high degree of accuracy, predict, you're on a path to have this, not because, you're not eating well or something, that actually sees it way before it could make sense of the signs that otherwise we haven't been able to figure out yet. So the very, very, very early detection is something that is probably going to change dramatically in the very near term.
It's so exciting, right? And even we haven't invested in this, but we've seen some of these innovations, which are basically like patches instead of shots. So instead of getting, your vaccine for whatever, like you have this little patch, or maybe this patch is for some kind of, medical administration, which a lot of people do, like especially with hormone replacement therapy. We saw one innovation, which I thought was amazing, which is a patch instead of Botox. Of like, sign me up for that. That sounds great. And so all these different innovations that help us optimize healthcare, I think is probably the most exciting thing that we're seeing in the future.
Yeah, let's talk about climate. And this is a little bit like what I was saying earlier, a little bit analogous to the diversity versus meritocracy. I think our discussion about environment and climate has to progress significantly, and we have to get away from, if you're Republican, you're against, things that sound like protecting the environment, and if you're Democrat, you're for things, and instead recognize that, most of us, regardless of where you are politically, most of us care about the environment. Most of us want the environment to be better, both in the present term and certainly in the long term. So there's common ground around the
Absolutely.
caring about the environment, and where we get caught up in these vicious debates is more about what people want to do about the environment. And some people look at, if you're on the Republican side, you look at things that, the Democrats want to do and say, do you really think that helps the environment? If we produce less oil on the ground here, but the world produces more oil in areas that produce oil in a less environmentally friendly way, did we really help our environment, or did we hurt our environment? Is that really, is a path to constrain stuff here when we can't control what's going on in other parts of the world? There's just a flaw in thinking like that. So a lot of times what people are really, having these very significant, arguments over is not about who cares about the environment more, but about the specifics of how you're really going to address it. And, is your approach really thought out? But it strikes me that the real solution, first of all, the challenge facing environment is going to grow significantly, not decrease. And it's your fault because you're an AI person. And AI and quantum is creating kind of a demand on energy that that's fundamentally different than anything we experienced in the last 30, 40 years. We're going to need a ton more energy in order to support kind of this AI future. And it's happening in the here and now. So while we're trying to make the climate better, we're also, creating this technology that's requires a ton of energy to support. Yet at the same time, that same technology, AI and other technologies, are going to make us discover things that are ways to produce energy that are far less taxing on the environment. So when you think about the future of how we protect our environment, how do you think technology plays a role in that? Especially because part of technology is causing us to have a more acute issue that we have to deal with. But how does technology help put us in a better position as you look forward in time?
Yeah, I agree with all those points. You're starting with, there is sort of this branding misperception that, we just live in this like really polarizing world where, the noise is and the debate is happening at the fringe and not necessarily like at the center of things where most of us all agree. So even, we have one investment we're making this week, which we can cut from the podcast if we don't make it, but I'm pretty sure we're going to make it. It's called Lumen Energy, which is basically a marketplace for solar energy for commercial buildings. It is like a no-brainer kind of a product and idea, but the founder and we recognize that like it's really branded this green, clean tech solution, and we don't want that to be distracting. It also happens to be part of this reindustrialization of America. And how do we make American manufacturing centers more resilient and sustainable? And maybe we should move that to branding. It doesn't really matter. Like, this is a great business that's going to help a lot of business or commercial real estate owners both, have greater returns and have a positive impact on the environment. Great. Like, that's a no-brainer. Anyway, so I agree with that point about that some of the wild debates out there. What can technology do? I think there's a ton. You should absolutely have Chris Sacca on your podcast next. I'm happy to talk to him about it.
Yes, please do.
I mean, this is what
because I can record him live in Cabo.
In Mexico. And if you need an assistant, we all should go down to Mexico, I think that would be very important.
Well, Give over there actually came down to Cabo because we recorded one of our portfolio companies. We were doing a closing dinner, and I said, instead of meeting in LA, why don't we meet in Cabo? And then we'll record a podcast at the same time. So we actually took the crew down and did a podcast there. So yeah, if Chris was, love to have Chris. And if he's open to doing it, we'd record it right there.
And you guys realize you have like the world's best job right out of college, by the way, like, as we're talking about like dream jobs, surrounding yourself with the best people. here you are. That's pretty awesome.
They have to nod their heads. Yes. I'm sitting here.
Yeah. For the
They'll pull you
audience, they
aside
are
saying,
nodding their heads.
Moxxie sounds great. Do you have a job there for me?
We do. We can talk later. But yeah, so Chris is really the expert on this, but we are seeing a lot of, great founders step up to this moment, and we are going to need a lot of innovation to handle all of the demands on data centers. And it is.
And the onshoring of manufacturing.
And onshoring.
We're not going to have, black smoke coming out of, the chimneys, but we're going to have a ton of robotics in these manufacturing facilities, a ton of them. And robotics take a lot of energy, to run. So the drain on our energy grid, that's going to be, AI is going to be the big driver of that. Quantum might even be a bigger driver down the road, but also the onshoring is going to be a huge driver of need for energy.
Yeah. And our grid is it was fragile already. It is not prepared for the demand. And this is going to need a lot of help, both from the public side and the private side. And what are the incentives I think that the government can help offer? I don't know. But I'm hopeful that there's a movement towards that. But it is a very big concern.
Yeah. Concern and opportunity for those early in their career. You talked about the grid itself, or I mentioned that, and you talked about the transmission. So there's the producing of energy, but there's also the distribution of it. So when I look back at my career, a lot of it was how you distribute bandwidth. Well, I think forward looking, it's how do you distribute energy? Because if you believe that, for example, nuclear is going to come back in the U.S., there's not going to be thousands of nuclear sites. There's going to be handfuls, and those handfuls are going to you have to take that power and move it around. Well, how's that going to happen? You can't just rely on traditional utilities and think they're going to do that for you. That's just unlikely to be the primary way. It's going to be innovators of one type or another.
Absolutely. So, and even I'll do a special plug for my son, because I do think we have this amazing, new generation of students and young people who are they're growing up, not just digital native, but AI native, and also just much more open-minded about the energy requirements and demands. And so my son is studying electrical engineering at Wisconsin. We're going tomorrow for his graduation.
Hey.
And but he's moving to San Francisco afterwards to work for a nuclear startup, which was not the case 5 years ago, a couple of years ago, that now we're starting to see the innovations percolating there to kind of catch up, and not even catch up, leapfrog and address a lot of our energy needs. So I am hopeful that we'll now have a new generation rethinking how we do distribution of energy, how we create energy, how we prepare for energy needs.
Is Moxxie, will you guys do anything where there's an intersection between software and hardware that involves some hard tech components beyond just a little device?
We've started to. We've made a few exceptions. We've developed our strength in robotics, for example, and we have all of our team, we're all ex-operators. The other team members, they're all engineers. Alex, as I mentioned, in software. Ashwin Lalandran is a hardware engineer, so that has given us a lot of expertise there. And then Pratik Joshi is a machine learning engineer. He's written 13 books on machine learning. So if you also need him on podcast, let me know. And so the four of us have leaned into a few areas where we think we can hopefully get some value, where we see potential living in the future. So we've done some robotics companies, Jacoby, which is AI for palletizers and addressing robotic arms, TinyBot, which is robotics delivery service for food, and Upside Robotics, which is using computer vision and
excuse me.
No, all good. We also invested in Upside Robotics, which is based in Toronto, and they're using AI and computer vision for robotics for farmers, giving them a real-time view of what's going on in their farm, which is great. And then we have another company called Heirloom Carbon, which is using crushed limestone to suck out carbon and sequester it. This one was a huge swing for us because we don't typically do things that are that capital intensive, but we fell in love with the founder. We thought the idea was, again, living in the future. We're going to need some big swings of how we deal with climate change and carbon capture. Lower Carbon actually led the round. And so we got very comfortable because their scientific team had leaned into this as well. So long way of saying, yes, we have leaned into a few of these hardware meets software opportunities where they basically will, coexist. Software is everywhere, right?
Yep.
And so what are those meaningful opportunities for us to back?
Yeah, one thing we're discovering is Colorado is a great market for very advanced hardware intersecting software. So we found ourselves in a lot of what would be considered hard tech companies, and what we're learning is the quote unquote capital intensity of hard tech sometimes does not mean you have to raise material amounts of money to execute the business plan. You can there's creative ways of funding the businesses that don't require you to put in nearly the amount of money that often is being put into software plays. And and I'm trying to fully get my mind around why that is, but we're seeing it over and over again. Even as the companies are scaling up, they're finding ways to do it with non-dilutive sources of capital that keep the actual investment capital quite light relative to the size of the opportunity. But anyways, thank you so much for coming on this podcast, and even more so for being an important person in the Colorado community, a new person, relatively speaking, but the example of the type of new people who have been moving here and helping to bring both Boulder and Colorado to new heights. And look forward to collaborating with both you and Greg in the journey of Colorado.
Thank you so much for having me. It's an honor.
Great.
Thanks.
Thank you.
Thank you for listening to this episode of The Bear Roars. If you enjoyed the episode, please like and subscribe on your listening platform. This podcast was produced by Loud Bear Productions and edited by Courtney Caruso with support from Kendall Weinberg, Emily Reed, and Gibson Siegert.